Well, the Dow has hit an all-time high. We haven't been here in 6 years, but I have to tell you, it's very lackluster down here. The mood is not euphoric. There are no satellite trucks parked outside. There is not massive amounts of media here. It's kind of been met with a shrug and a meh. So I'm here with Keith Bliss from Cuttone. Now, Keith, you know, we were just talking about this rally. We have not had a lot of volume in it, but we have had the retail investor involved.
Yeah, the retail investor has come back in with a fury, you know, relative to what we've seen over the last 2 years, that's for sure. In the professional world of stock trading and investing, though, retail investors coming in hard and heavy is actually a contraindicator for where you think the market's going to go. We've seen that throughout history of stock trading, that when retail investors really plow hard into a market, that generally signals a top. So that's one of the cons that I would identify for where this market's going to go from this point forward. But we shall see. I mean, this is a market where we're hitting all-time highs that's unlike any other market where we've hit all-time highs. We've never seen this amount of involvement from the central banks around the globe playing inside of the asset markets, which has had the effect of equity markets being the only place where you can get some substantial yield out of this, and that's why a lot of money is pouring into it right now.
Right, as we know, the Oracle just the other day on CNBC said, oh, don't be in bonds, you got to be in stocks, that's where to be. So Papa Buffett said be in stocks. But you guys down here, you don't have your rally cap on. In fact, I feel like you got your hard hat on because you're waiting for these stocks to come down and hit you on the head.
I'm actually quite surprised at the move that we did hit the all-time highs here. I've always said in 2013 I thought we would get there. I just didn't think it would get there with this move. But you never know when markets take on a life of their own and you get that kind of momentum built into it. And I've not picked up overwhelming momentum, but certainly enough to get the Dow up to the all-time high. Now, what's curious to look at and what we need to inspect is that the Dow is hitting an all-time high before the S&P does. Okay, so a narrower range of stocks, and one of the things that we've identified that's kind of broken in this market that doesn't make a lot of sense to us is the Dow has a lot of dividend-paying stocks and defensive stocks in its index. That's why it's been rallying. That's where the money's been pouring. Generally, if you see a believable rally, even on low volume, you would see people making bets on those much more names that have a much greater degree of unreliability, if you will, from an earnings performance. Dividend stocks, utilities, those are defensive names. You would see that if people thought the market was coming back. That's where we're seeing the money flow. So that gives me pause on this rally and where it's going to go next.
And as we were saying, you know, there has been a lot of intervention in this market, obviously with all the liquidity and the quantitative easing. It's basically put these stocks on steroids, if you will. And that's where we're at. We have hit market highs, but it's been met with a shrug and a meh. That's Keith Bliss from Cuttone, and I'm Debra Borchardt with TheStreet.